Greetings, friends, and welcome to the Financial Game Special Edition. As always, Ferdinand Ruano, Jose Miguel Crespi in episode number 61. Jose Miguel, very good morning. Today is Friday, recording podcast 61.
Very happy, Ferdinand, once again to share information to be recording. We've received feedback from our audience who listens to us. We're absolutely thrilled about that. Recently, just so all of our wonderful audience are aware, we were both invited guests on the very special podcast, Más Allá del Elemento. It was recorded in the beautiful city of Orlando with a talented fellow Puerto Rican, Dr. Jean Carlos Cruz. And it's going to be 2 episodes that we will also be sharing on our podcast platform with super valuable information. We touched on 2 topics that are impactful, okay? He aims to make an impact with his podcast. He talks about topics that aren't often discussed in the world of finance. He speaks with business owners, company leaders, etc. And it was really good. So, Ferdinand, how was your experience?
Excellent. The doctor is a young businessman, an impressive entrepreneur. It was a pleasure and honor to spend some time with him. I really learned a lot of things, and in addition, we shared a lot as well. That podcast was, you can watch it, try to check it out, because we really talked about things not only related to finance, but also what we call behavioral topics. People ask themselves about their finances. What is their biggest fear about certain things? In some things, he puts me on the spot. He asks me certain things about myself.
That's a great question. It's huge.
So it's going to be interesting, and we are going to have him here live. We're going to invite him here in person. We tried to make it so he wouldn't have to make the trip, but he likes things to be live in person because he says a lot is lost through television, through Zoom or whatever. So he's very entrepreneurial and really looking forward to it.
Yes. So we'll also have him on our podcast for you all to listen and share. So we're going to put him, as we say, on the spot and ask him good questions about his career.
Absolutely. In the world of medicine.
So,
Jose, I wanted to ask you, how exactly are you seeing things right now with all these recent changes? This year has been volatile in terms of news. I know, a greeting to all our Venezuelan brothers and sisters. I know that they are going through a situation. Our deepest thoughts and prayers are with them during this difficult time. And we know that help will surely come soon. Both the resilient people of Puerto Rico and our dedicated community here are truly united in prayer, and also in being fully committed to being able to help the entire community. Now, looking at the bigger picture, how do you see in general terms the current economic situation unfolding?
Well, look, Ferdinand, it has been, and we've already talked about this, but it has been a very interesting year, hasn't it? For the markets, definitely it's been a volatile year, okay? We had an April with a general decline in the US markets. The same thing is happening so far in June. We had a magnificent May. So, looking at it on a month-to-month basis. Now, looking back at it, but definitely significant volatility has been present, okay? It's been a year where strategic diversification has clearly proven itself to be the winning strategy, period. The portfolios that have suffered the most in the US markets this year have been the concentrated ones, okay? And especially a lot of people concentrated in technology. Big tech, mega capitalization stocks, the famous Mag 7, just to give an example, are the companies that this year have been the slowest. They've been the ones in the red. They've dropped. The most notable tech giants among them are Microsoft, Amazon, Meta, Apple, and Nvidia. And remarkably, all of these companies have been performing in the negative territory recently. Nvidia itself is down by 8%. Knowing that it's been the most talked about company and the best performer in recent years, it is actually negative so far this year. So that's a perfect example, right? It shows the risk of being overly concentrated, especially for many investment portfolios that hold this company, often as a primary core holding. The stress-free equities portfolio from Lionman is one of those affected. Well, it is quite clear that because of that, they have seen their investment portfolio has certainly taken a bit of a hit, right? However, on the other hand, there are some very trending topics and quite interesting areas to consider. The data center sector has been very strong this year. We've seen how a number of specific companies in the healthcare industry have performed remarkably well over the recent period, and various industrial sectors have also performed very well. This is a trend that we are seeing across the board, wouldn't you agree? This year is a clear example that diversification has definitely paid off. Here is an interesting financial fact for you, Ferdinand. International stocks so far throughout this current year, specifically during the first half of the year, are actually outperforming US large cap stocks. Then, by a margin of about 2%, international stocks are up by roughly 10.4% overall.
And gold, which many investors often discuss as a reliable hedge against volatility, against various periods of economic uncertainty, war, and other global crises. How has gold reacted?
Gold is negative as well. The price of gold has actually dropped by about negative 5.5% in terms of price change so far this year, right? And when you look at it from that perspective, Ferdinand, it is a bit different from what the textbooks say, in the sense that, right, under normal circumstances, in years of high volatility, years where there is significant economic and financial uncertainty, macroeconomic uncertainty as well, gold tends to be the primary safety asset that people usually gravitate toward as a reliable store of value, right? And that hasn't been the case in 2026. So in that regard, well,
how would you explain what might be causing that specific kind of market behavior? Because if we look at the reality of the situation, the price of gold actually experienced a remarkably powerful takeoff. In my personal estimation, I interpret it from an economic point of view as being driven by two primary factors. One, that inflation is not going to turn out to be as severe as most people think. And two, that if there is a rate hike, fixed income will become more attractive than gold, which doesn't pay any kind of income or interest. In other words, there is a relationship, a correlation between inflation and interest rates, just as there is with the behavior of gold. What's your impression?
Well, look, I completely agree with you on that point. I think the expectation that maybe inflation, which has been, right, what they often call sticky, we've had this inflation that has remained persistent over time, and that is exactly what has forced the Federal Reserve maybe not to have to make a move just yet, not to move toward the possible path of rate cuts. Then we had the significant phenomenon of energy concerns with the ongoing situation in the Strait of Hormuz and the intense war over there. So what exactly happens next in this scenario? If you take a moment to go back and listen to our last episode, we talked about how if energy prices remained at these high levels, how this was obviously a significant inflationary phenomenon and could cause an inflation problem for the economy, right? And the Federal Reserve, knowing that we have a reserve now led by Kevin Warsh as the new president of the Reserve.
Yes. Who, by the way, has expressed himself, he wasn't really the expected pick. I mean, he has changed his stance and to a certain extent has sounded hawkish. That is hawkish for our radio listeners, just so you understand. When you see the financial news and the press in the United States, when the Fed is taking a hawkish stance, it means that a hawk is essentially a symbol of firm policy. In other words, it is vigilant about inflation, and when a statement is hawkish, it means that they are going to try to curb this inflation situation, and one of the antidotes or remedies used is to raise rates, okay? When people in finance use the term dovish, they are referring to the nature of a dove, which is a very gentle, rhythmic, and artistic bird that represents peace. In economic terms, this means the Federal Reserve intends to be more accommodative and relaxed in its approach. They want to foster an easygoing environment by keeping interest rates low to support growth rather than being aggressive or restrictive with their monetary policy decisions, just for educational purposes.
And in that, using that same line, Ferdinand, the message was indeed a bit hawkish in his first press conference.
Very hawkish.
It's kind of like,
I don't think that was expected at all.
No, however, I must say there is something that has actually taken place in these last few days, and it is the interesting phenomenon that when reaching a quote-unquote agreement, and then, right? And all this news that once again oil is already flowing through the strait, that there are no restrictions, etc. We've then seen how the price of energy, specifically oil, has dropped
Yes.
but substantially, right?
Yes.
A barrel of crude oil, which reached a peak of $118 at one point during the month of May, or perhaps late April or May. Well, today it has fallen to $69, right? And so the consumer can clearly see this change reflected at the gas pump, right? When they go to fill up, we've also seen how the price of gasoline has dropped. So we have a Federal Reserve that, according to Kevin Warsh, will continue to be data dependent as the new data comes out over time, okay?
Mm-hmm.
Right now, the futures markets for interest rates are inclined toward the possibility or mostly expecting a significant rate hike at some point during the remainder of 2026
Mm-hmm.
by at least 0.25%. That, in my own personal opinion, Ferdinand, could potentially change the situation. We have to see the tone now in July, how things are developing. That's why it's data dependent, right? How the data comes out. Because if the primary driving factor or the most significant and pressing inflationary concern we had was the price of energy, and we start to see that it stabilizes and finds a new level once again, then we are basically returning to the exact position we were in, possibly before the situations first began over there in the Strait of Hormuz. So we really have to wait and see how things flow from here.
The inflation number that was released this week didn't, if you examine the data beyond the headline number, which was 4%, these numbers are also for our dear friends who share and support the podcast. We don't really look at the top line. We actually look at the components. And if you notice, the energy component was the one that drove the number up. If you take out the volatile energy component, you end up at 3.2 or 3.3%.
That's the famous core.
The central core isn't really that bad at all. I think the situation is fixable, and I believe the markets are taking note of that. That's why the market has been quite resilient. The stock market and the credit market are in a trading range.
Another piece of news that I think came up between the last episode and today, Ferdinand, which obviously made quite a splash, has been the biggest IPO in the history of the United States. So regarding SpaceX, its initial IPO price was set at $135, but it officially went to the market this past Friday, June 12th, opening at $150 per share, okay? Briefly, on that day, it had a spectacular rally, which is typical sometimes of an IPO with so much hype behind it. Yeah, and it reached $225 on the very first day of trading. But after that, let's call it a momentary peak, it has dropped by 32%. And if you look at it with where we are today, we're at $153 per share, okay? We're $3 above, more or less, where it opened on the market, and still positive compared to its IPO price of $135.
Nice.
So what's interesting, what really stands out to you, Ferdinand, about the work at SpaceX? It's really all about the deep vertical integration between its many different revenue lines, okay? Now you have to remember that SpaceX actually owns Starlink. And right now, Starlink is the specific business line that I think most people see the greatest potential future in for this entire company, at least in the initial stages. It's an Elon Musk company, which we know also attracts a lot because of his personality, because of how ingenious he is, right?
Yes.
In that sense. But what is it that worries market fundamentalists? Valuation, okay? We are looking at a company that is valued at approximately $1,770 billion, okay? It's $1 trillion valuation.
Wow.
Which obviously isn't sustainable in the long run. It's a brand new public company that just hit the market, so you really can't look back at historical corporate earnings for guidance because, well, its total operating income has consistently been negative while the core technology has been under heavy development. So it should continue to be a point of concern for those people who are watching closely, right, as they wait for the business to finally turn a profit, who are interested in knowing what our angle is, what we think. My opinion, it should continue trading like any IPO, right? It's going to be extremely volatile in these coming months. You can go study Meta's IPO, or at that time it was Facebook.
Facebook, yes.
Well, here's a perfect example. You can also study Amazon's IPO.
Yes.
Well, which is quite clearly
And it's perfectly logical. If you notice and remember, these companies often come with private equity investments that have been patiently holding on for 5, 6, 7, or even 8 long years, just waiting for that big moment, their ultimate big exit. Because really, for these private equity firms, they will leave a part of the company if they truly have, quite honestly, the faith and the right calibration, but they have been funding that project for a long time. So when the IPO comes out, it is their way, their exit strategy to finally realize the value of what they have been investing in for 5, 6, or 7 years. What happens? That IPO, this is supply and demand, was oversubscribed.
Yes.
It means, and the reason why investors want to oversubscribe, guess why that is? This is because they want to ensure a guaranteed exit strategy for the early investors who have been involved from the start. And as a result, they process a higher volume of orders to create sufficient liquidity for those people who are exiting, ensuring that they don't disrupt the overall float. The float means all the stock that's being released into the market. And there comes a moment when you have this hype, it goes up. What happens? The private equity firms or the people who have already been in say, now is my time to get out. And then the other float comes in to balance supply and demand. But look, it is actually the big institutional players who are currently cashing out their positions. They are realizing their significant gains versus possibly the new float of capital, which comes primarily from small retail investors who, as I always like to say, if you are going to do it, you must keep in mind that you should be looking at it over a long-term horizon of 5 or 6 years.
Yes, it needs to be long-term. The first year, usually it's very...
You are not a big whale. You are not a private equity. This isn't, but I tell you this because people have these ideas in their heads.
And I've raised 75 billion privately. 75 billion from shareholders who were waiting for their moment to be able to exit.
Remember that Elon Musk also has to hunt a little bit. He has to milk the cow now so that,
looking back at history, he has been the kind of person who has done that. He did it with Tesla. He's done it with other companies where when he sees his moment, he's someone who sells shares and takes out the capital.
Of course, there are SEC regulations that as a founder, he simply can't liquidate all of his holdings at once. He has a specific set of parameters to clarify that.
Yes. Go on, but normally when he does have access, he tends to take out and reinvest in some technology.
Another company.
Of course.
We're clear on that.
That's normal. So, well, for SpaceX, for those people who got in early, you really just need to have a great deal of patience. Typically, we know it tends to be volatile. What could happen with the price? If there were a break below the IPO price of 135, that's where a reset will come. Typically, and that's why I encourage people to study a bit, to read about previous IPOs, like Meta's.
Yes.
A reset comes if it breaks below the IPO price. For now, it's not close, right? But it could happen, okay? It could happen. Those people who are looking to invest for the long term, well then yes, this kind of behavior is what could give them an entry opportunity. So there's no more time. Ferdinand, time went by pretty quickly for us.
In our next episode, we'll discuss one of the most significant issues and concerns in the United States right now, aside from the matter of affordability, which we'll cover in the second chapter. It is the critical issue of the widening gap with inflation that is opening up. The fact that there is a difference between the income I need to maintain my standard of living versus what I have saved or can generate now. And that's where the jingle jar comes in. Now, people are looking for security. The problem is that if you look for too much security, the retirement gap with inflation is widening.
Mm-hmm.
So we'll talk about that topic next time in the next episode because there are several alternatives and designs that have been developed regarding this. Fidelity companies are publishing a lot of articles about this, Vanguard as well, and I think it's a hot topic.
Yes, we have to address it. Let's take a much more detailed look into the topic of planning. In fact, a lot of followers have also asked for this topic, so we can definitely dedicate, I think, the entire next episode to this kind of topic.
All right.
We can dedicate a bit more time to planning.
We'll see you next time. Until next time, friends.